for sure. So it's 12, according to my clock on the dot. Shall we kick off? Are we all right to go? So I appreciate there might be some other people joining us, but we'll start from now. So let me just do a bit of an introduction to Wise Monkey and to George and I very briefly. We've got a lot of content that we're going to get through, we want to get through today. So we'll do this quite quickly. But I set up Wise Monkey Financial Coaching about 18 years ago. I used to be an independent financial advisor, advising on pensions, savings, investments, mortgages, all that kind of thing. But I felt that there was a need for something else, some guidance and support with money that had nothing to do with products. And also addressing the emotional relationship we have with money. So not just the practical side of what can we do differently, but also what gets in the way. And so that's kind of my background. And I've been working in this way for the last 18 years and was the first financial coach in the UK. And now I'm training up people widely. So more and more financial coaches are going to be out there. So watch this space. And I'll hand over to George, who's on my team.
Yes, can I welcome everybody too? I'm George Callahan. I teach economics and personal finance at university level, and I'm also a trained financial coach. So, one of the differentiating factors of financial coaches is that we don't try and sell financial products as such, but we provide financial education, financial support. And as Simon has mentioned, we crucially recognize the emotional importance that is attached to money. So, in summary, in this kind of financial well-being seminar that we're going to run through, you're in very safe hands. You've got two very knowledgeable, competent professionals, and please feel free to ask any questions you can in the chat box. I think that given that we might have upwards of 50 people on this, it may be better not to come in on the audio, but try and use the chat box. Simon, have you got anything to add to that, or should we just?
No, that's great. Thank you.
Okay, so the way we're going to run it is Simon and I are going to share this, just so as you don't have to hear one of our voices the whole way through. I'm going to run through some slides and then I'll pass over to Simon. It's a little bit text heavy, it's a little bit focused on the detail, but I think given these quite unprecedented circumstances, the financial detail is really, really important. Okay, so I'll kick off. Okay, financial well-being.
And the other aspect to all this is that we absolutely recognize that there's a huge emotional content to this. There's a lot of uncertainty and a lot of fear surrounding this. And of course, that's going to play out in the way that we relate to money. Right here, right now, we're going to be concentrating more on the practical side, but just know that we appreciate that it isn't always easy to take action when we're in that place of fear. Sorry.
Yeah, and I think it's also, while we're putting this in context, we're going to run through here some of the general principles that the government is offering in support during this kind of COVID-19 situation. And I think, there's three different employers that you all work for. So some of these principles might be applied differently in your personal circumstances. But there will be an opportunity, as Simon has mentioned, through, I think it's Andrew Brown in Health and Safety, that if you've got particular questions relating to, your own pension situation or your own kind of sickness leave, they can be answered and you can get through to Simon and I via Andrew. Yeah, okay, so, we know, we know that we're in an unprecedented situation. The government is trying incredibly hard to help. They've also put pressure on the financial and utility companies to try and offer some help. And to be fair, many of these companies off their own bat are looking to try and help people in difficulties. And what Simon and I want to try and remind people of is it's not just the government and companies that can help. People themselves have got their own resources that they can draw on. So the context, we obviously know that there's a severe economic shock hitting not just the UK's economy, but this is a global pandemic. And it is, as an economist of 30 years standing, there has never been such a challenge to the global economic system. So this is pretty big. What are we noticing almost immediately? An increase in unemployment. That's, people who will be signing up for universal credit, and also in underemployment. And that's people who want to work full time, but maybe are just scraping by on a few hours a week. And just to put this again in context, the applications for universal credit in the last 2 weeks of March, ordinarily they would be about 100,000. And there was 1 million new claimants. So that gives you the size. This is big. And this is something that we want to bring up right at the start. You guys are all here as individuals, but many people reside within households where there may be partner, children, and of course it's possible that people have got financial responsibilities for extended household members. In other words, people who are related to you but not living literally in the same house. All of these financial interrelationships can cause kind of practical and emotional issues. So what is the UK government trying to do? Before I bring in any bullet points, in short, they're trying to do a tremendous amount. I mean, again, the assistance that the government is giving the economy and companies is unprecedented. Never in the UK's history have we seen this before. So one of the schemes we're going to run through is the scheme that the government are covering up to 80% of people's salary or wage during this time when they're what's called furloughed. We're going to go over some of the details of that. They're also offering help to people who are self-employed. They've made some changes to statutory sick pay. We're going to cover that. They have made also some changes to the welfare benefits. Simona and I are going to cover that. And they've also put pressure on banks and other financial services institutions to give customers a little bit of leeway when it comes to repaying secure debts like mortgages and also unsecured debts like personal loans. Okay, so the first big scheme, and this is the major one that many of you guys will be involved in, is employers who can't provide work at the moment because everyone's been instructed to stay at home. They can what is called furlough workers. So in other words, people are still on the payroll, they're just not actually doing any work. And that helps. Obviously, it helps people as individuals. It helps the economy because people, once you're unemployed, you can lose your skills, you can get out of the habit of work. So people are still receiving up to 80% of their wages. Now, some employers, and this is where we don't know the particulars of your particular employer, some employers can actually top that up to 85, 90, or indeed 100%. There's a monthly cap on this, which has got some sense because already the government is writing quite a big check. It didn't want to write an unlimited check, so they put a monthly cap of £2,500. So that would be the equivalent of, I think we calculated someone, was it 3,125? That's
right, yeah.
So quite substantial. Pay should come through from your employer as usual. So if one gets paid weekly, if it's monthly, it's monthly. The scheme, it should be up and running by the end of this month, that is April. What most employers will do is that, the March pay would be the standard pay. They will then claim that back from the government starting at the end of April. And it covers all contracts. And when you dig down a little, you feel a bit sorry for the civil servants because people will have been really burning the midnight oil trying to work out how do we actually cover the tremendously complex set of employment contracts. But I think they have done it and are doing a really good job. So it covers 0-hour contracts, covers people on a temporary contract. Simon.
Sorry, I'm we're getting lots of questions, which is fantastic.
Okay.
I want to make sure that we can kind of field the questions as we go where they're relevant. So some of them we won't address straight away, but we'll try and get to them later. The 2,500, just to be clear, is gross before tax, right? So what was the 3,125 again?
That's the 80% is 80% of the maximum wage. So if you were getting 3,125 gross, it would be capped at 2.5.
I hope that makes sense to the person that asked. Carry on, sorry.
Okay, thanks, Simon. Yep, I mean, just for those who are listening, when you're running through the slides and trying to think about them, it's really helpful to have someone else look into the chat box. Yeah, okay, so I was saying how it's covering a lot of contracts. Yeah, there's a minimum 3 week and a maximum of 3 months. However, because this is an evolving and developing situation, the government had said that if that 3 months has to be extended, they will look at it. So you might remember that the Chancellor is quite fond of repeating statements, and one of them was that they will do whatever it takes. So if it has to be longer than 3 months, I'm sure it will be. Employees are still paying tax, national insurance, and their standard pension contributions out of that 80%. And you know, an obvious question which might come up in the chat box is, how do they calculate it? So what they've done is they will take the highest of the month's wage 12 months ago, so say it was March 2019, or the average of monthly earnings over the 12-month period, whichever is the higher. Then, of course, you know, and it's made up of contractual pay, such as wages, salaries, overtime payments, which is, you know, can be quite important. I understand a lot of you guys are involved in the construction industry, so there could be overtime payments involved there. What can one do during the furlough period? You can undertake training and volunteering, but one cannot work for the same employer that's getting paid for people to be furloughed. Yep, okay, and the standard employment rights hold. And agency workers, again, you know, the way that the UK labour market has gone, there are many more agency workers. As long as agency workers are paid through the pay-as-you-earn tax scheme, this support scheme covers them. It also covers non-UK residents. Again, I know that, you know, a lot of you guys are based in London and the southeast. It could be that there's people from the European Union working in your company. This scheme applies. Now, Simone, have there been questions coming up on the chat box when I've been running through that?
Yeah, so questions around the £2,500 we talked about before. So that's I think probably a common question that we're all going to be thinking about in relation to employees and self-employed too. That we know that there's that cap on it. So the question is, what would that be after tax? And it isn't just tax; it's also pension contributions. So your company will still, you and your employer will still be making pension contributions, and national insurance, and all of that will come off of it too. Now, I haven't got the number off the top of my head. I could do a quick calculation, but that would take me a few minutes. Could we say broadly, George, do you think what £2,500 net gross would be equivalent to after tax?
Well, yeah, it would be, if you yeah, I would think 1800, 1900, something like that.
Okay.
That's what I would estimate as.
There are questions around credit rating and things like that, which we're going to talk about later in the government carrying over leave from one year to the next. How will that affect individuals and companies in the implementation? I'm not sure I could. Have you got an answer to that?
Yes, what the government are strongly advising companies is that any annual leave that was due to be taken during this period of home working or furlough should be carried forward and used over the next 2 years. So if the furlough period was 3 months and say one had booked a 2-week holiday during that 3-month period, one would have the right to those 2 weeks once the furlough period ends for 2 years after that. So the leave should be carried forward for up to 2 years.
And I guess it's possible that employers could choose to pay for that leave, so they buy it back from you. That might be something that an employer could offer.
Yes, indeed. And Simone hits upon quite an important point. You know, employers will look at these guidelines and interpret them in different ways. Some will be particularly generous and some might follow them to the letter. But of course, you know, to find out, it's the employee will have to be a little bit assertive and perhaps even pushy to find out exactly how are their own employer interpreting these guidelines.
One further question around tax brackets, how they might change. So if your income has gone down, over this period of time, it may be that you've overpaid tax in previous periods. So there may be, at the end of the tax year, it would be wise to put in a tax return whereby you're entering what tax you've paid, and then it will calculate what tax you should have paid and sort out a rebate at the end of it. Is there anything, does that?
Yep, I'll just add, Simone, I'm
yeah.
taking a note of these quite detailed tax questions, and what Simone and I'll do at the end of this is, in addition to putting this slide deck to your employer, we will also add another couple of slides with links, because there are tax calculators that one can use to plug in the figures. So I'll just note that down now.
Brilliant, thank you.
Simone, I think I was going to pass over to you for the next couple of slides.
Yeah. So with self-employment, so if you're self-employed, you could be a sole trader, or you could be, so some of you may be sole traders. You may be in a household where your partner is a sole trader. So that's why we're kind of focusing on this. So there's sole trader, and then there's limited companies. So some small business owners have their own company and they pay themselves in a different way. So there are two different rules here. So for the self-employed, they work it out based on your profits. So that's your turnover minus your business expenses. So what you would put down on a tax return and pay tax on, that's the maximum they'll pay out on. They'll pay out up to 80% of that, up to the cap, which is that £2,500 again. And that's again gross. So that's before tax, but after business expenses. So they'll take those 3 years into account and give you and base it on an average. Now, if you've only been self-employed for a year, it will be based just on that year. If it's 2 years, it will be based on an average of 2 years. And if you've only just begun self-employment and you didn't do a tax return for 2018-19, so in other words, a whole tax year between the 6th of April 2018 to the 5th of April 2019, sadly, there is no benefit from this scheme anyway that you would be entitled to. So it's so the people that fall through the crack here are if you haven't got any evidence of income, you haven't had a full tax year behind you, or if your profits, so remember that's your turnover minus expenses, if your profits are more than £50,000. So I was working with a client last week whose average profits were £52,000. He benefits from nothing here. So they fall through the crack. And the other people that fall through the crack is if you run your own limited company, then you might be a sole director of that company, and you pay yourself in the form of both salary and dividends. And the salary part of it, for tax reasons, is usually very small, like £700 a month. You can benefit from the furlough scheme. And furlough, by the way, I would think of as standby. You're pressing pause. That's kind of what it is. So you could benefit from the furlough if you are pausing your business, but you can't, unfortunately, benefit from the furlough if you still keep the company running. So that £700 a month, or whatever the salary you pay yourself, you're allowed to get 80% of that. Unfortunately, it's not a huge amount of money, but it's something. But what you can't do is claim anything on the dividends. So the profits that you pay yourself on top of the salary, you can't get any benefit on top. And the other rule is that if you are self-employed, you can only benefit from the self-employed scheme if more than half, so 50% or more of your income is from self-employment. Sorry, I just lost my screen.
Okay. Yep.
Oh,
Simone,
just come back.
Yep. Okay. Just there was a question in the chat box about directors of limited companies, because of course, some limited companies might only be 1 or 2 people big, and if one drew a remuneration primarily through dividends, they are not covered by this. So while the government has been tremendously generous to the vast majority of people who are either employed or self-employed, the one area thus far of weakness is directors of small limited companies who draw most of the money through dividends.
Yeah, so it's not to say that there is absolutely nothing available to them. There is. It's just there isn't anything through this particular scheme, the Self-Employment Income Support Scheme.
Yeah.
So, but we'll come on to other benefits that will be available.
Okay, Simone, that's the next slide up.
So this, I think I've covered most of this really. It's still that maximum of £2,500. This is the important point. It's paid in one. So if you are running your own business, then there is going to be an issue around cash flow. So this particular scheme doesn't kick in until June. So the government had to allow time. They gave, because the tax return was completed at the end of January, they had to allow time for people to put in their tax return late. So this scheme won't be paid until June, but it will be backdated to March. So there might be some cash flow issues here for the short term. But what the other things that they're implementing, George, if you want to
Sure.
move on to the next slide, is that they're allowing a deferral of self-assessment tax. So there's another, when you run your own business, you pay tax in January and also in July. So what they're saying is, don't pay the bill in July, we'll give you another 6 months to pay that. So if you have been saving money for tax, then you could raid that money in theory to cover you over that period between March and June, and then pay the money back into the tax account once you receive this payment. The other thing is if you're VAT registered, so if you or your partner or family members have a business that is VAT registered, that's going to be, the next VAT payment will be delayed. So again, it's about how do you help people with cash flow? That's a small help to help in the very short term with cash flow. The other aspect of this is that if you are a business that pays rates, so you rent property as your premises, you are eligible for potentially for a £10,000 grant. And that's a grant, George, I'm right, that's a grant that's paid to you taxable, I think, but you you don't have to pay it back, right? That's just paid to you.
Yes, that's right, Simone. Yep.
Yeah.
And of course, the other crucial factor of the self-employed is that they can still work. So they can claim as unworked.
That's a really, really, really important point, because if you're furloughed, so if you're a sole director of a limited company and you furlough yourself, you can claim the employment subsidy, but you can't work. You're not allowed to work. But under the employment rules, you are allowed to work. So you could, in theory, do, either with your own job or something else, you can, in fact, even if you're an employee and furloughed, you can, I think, in theory, work for someone else, although you've got to think about the ethics of that. But but with self-employment, you are allowed to, you have their blessing, the government's blessing, to carry on working. So in some cases, I've seen clients actually better off because they're able to claim that and they can still carry on working. And the other aspect is that there's a business interruption loan scheme that is, so most of the big banks, I think, are offering that. There's a hyperlink when you receive the PDF to take you to more information about that. But there is a loan, and it is a loan. So unlike the grant that we talked about that you don't have to pay back, this is a loan that you would have to pay back. The interest rates and details of that would depend on the lender, but there is a loan that would potentially help through cash flow crisis. The other aspect of this through self-employment is that if you're getting into trouble, you may have already got behind on HMRC payments. They will allow for the fact that we're in a crisis right now, and there is a scheme that they will support you. And even if you're late with your HMRC payments, and actually, to be honest, it's nothing to do with the coronavirus, I would still blame it on coronavirus, and then they will be much more likely to kind of adhere to your request. You need to kind of present to them what income you've got and what expenditure you've got, that they will almost certainly be able to come up with a payment plan with you.
Thanks,
So don't
Simone.
be afraid to ask.
Simone, I'm just going to pause briefly and just say to people, because I know obviously in this format interaction is kind of difficult, but even just for Simone and I's benefit, if you could just put in the chat box, things going okay, I'm doing fine. I'm conscious that we're hitting you with quite high level principles, some of which will apply to you and some of which you'll think, oh, that's not of interest to me. But of course, you know, what we're trying to do is, there's quite a lot of people, someone might have a relative who's self-employed and therefore this, you know, they might be able to help that person. So we're going over quite high level stuff, but I'm hoping that over the whole hour, you will all get something from this. You'll think, yeah, that was really, really helpful. And also, I think, you know, it's worth pausing because we are in very difficult times, but I think what the reassuring, there's a number of reassuring factors. One is the government are really trying to help. Your employer is clearly also really trying to help because, for example, they've set up this seminar. So, you know, as I say, please put anything in the chat box, even if it's, you know, George, you're speaking too fast, or it's going absolutely fine, or, you know, the dog's just walked in. Any interaction is more than welcome. So, Simone, I'll go on to the next slide if that's okay.
Yeah.
Okay, so with the slide deck you will receive afterwards, you're going to get some links that will help a lot too. Yep, okay. So obviously some people, you know, are going to either have the virus, have someone in a household who's got the virus, or who are showing symptoms that might indicate they've got the virus, so they're actually off on sick. The usual sick leave and pay rules apply. So whatever are the standard rules in your company, they should apply. Once those, you know, often what a company might say is for 4 weeks, the employee gets full pay, for another 4 weeks, they get half pay, then they go on to what is called statutory sick pay. Statutory sick pay is gone up a little bit, and it is paid from day one. So prior to this particular situation, it was paid for day 4. So there was kind of like 3 days where one was sick and didn't get any statutory sick pay. It's now paid for day 1. Statutory sick pay is primarily for people on PAYE, so self-employed or people on a kind of modest wage. They're asked to claim universal credit or employment and support allowance. Now, you might remember that when we opened this seminar, one of the statistics that I'd mentioned was in the last 2 weeks of March, instead of 100,000 new universal credit applications, there was 1 million. Which is, you know, obviously tenfold, a big increase. So, you know, some of you might, if you've always been in work, you might have never really touched upon universal credit. Or again, if you're furloughed, you know, you might find that a member of your household or extended family suddenly is in a position of claiming for universal credit. So the next couple of slides might help you talk to them about this topic. Clearly, it's aimed at people who are on a low income or out of work. There's an age limit at which it starts, 18 or over. There are specific, and it's a complex-ish benefit system. There's a cap. If you or your partner have got more than 16,000 in savings, you can't get universal credit. And indeed, there's a kind of sliding scale from 6 to 16,000, at which one progressively loses a little bit of universal credit. You have to be a UK resident, and at the bottom there's a benefit calculator where you can put in your own circumstances. Okay, so what is the allowance? It's hard to give a particular figure because part of its advantage is it is supposed to be unique to the circumstances of each person. So that's a very, you know, that £500 per month is a very average figure, and that's for 2 people. Where either person's over 25. One then gets extra depending on your household circumstance. So if there's children in the household, if there's any disability or health conditions, if there are housing costs that need paid. So, you know, I mean, compared to being in work, it is quite a modest sum of money, but it is still, it is still something, and the government is trying to speed up the way the universal credit is being received. One of the criticisms of universal credit is that there was a 5-week waiting period before people would get their first payment. They have made some changes, so people should get money more quickly than that. Simone, is there anything coming through in the chat box there?
Not specifically about that, but there is an advance payment that, have we covered that?
It's just at the bottom there. So you can claim and access advance payments without going into, because previously there was a focus on going into a kind of job centre. Now you can do this online. So again, this, yep, sorry, Simone.
I was going to say it could be done online, and also there is, if you go into that link, there is also a helpline. I appreciate that if you call the helpline, you've got to have a long wait on your hands. But if you do need to speak to somebody, because as well as universal credit, there may be other benefits that you would be entitled to if you are in financial hardship. So if the universal credit doesn't cover everything, there is, as George says, there's additional help for rent and service charges, but there is, on top of universal credit, there are additional kind of alternative payment arrangements if you're struggling to pay rent that this wouldn't cover, for instance, or for that matter, food or health. There are additional supports available, and of course, there's still citizens advice you could call. George, is that right? They're still operating. Again, a long wait on your hands potentially, but there is support out there if the online isn't clear how you should claim or what you should claim. There are support services out there.
Exactly. And just to reiterate, the universal credit one may not be for your personal circumstance, but it might well apply to someone in your household, another family member, or indeed a friend who's facing challenging circumstances.
And that's where that, if somebody is a sole director of a limited company, I know there were questions on that, then they're unable to claim any of the furlough benefits, perhaps because they still need to run the company a little bit. They may be able to claim universal credit.
Exactly. And this next slide is another allowance, the employment and support allowance. So it's, again, quite a modest amount, £74 per week, depending on how old you are. And you can claim it on its own or as well as universal credit, but you can't claim it with statutory sick pay. There are certain criteria that one has to meet before you get it, and mainly linked to paying national insurance contributions. And you can get it through employment or self-employment. So whereas statutory sick pay wasn't open to the self-employed, the employment and support allowance is.
And that's mainly when this would be used, right? When it's not when it's somebody who's self-employed, probably this is when it comes into its own, the employment and support allowance.
That's right, Simone. And another distinguishing feature of this is whereas the universal credit had that £16,000 ceiling, if you had savings or your partner, you couldn't access it. You can claim employment and support allowance even if you've got 16,000 or more. So it's an important benefit to be aware of. Okay, so this is, this is one. I know it's a particular bugbear of Simone's. There is something called the marriage tax allowance, and something like 2.4 million married couples do not claim this, and they could. It's not a whole load of money, but if a married or a couple in a civil partnership, if one of them is a non-taxpayer and the other is a basic rate taxpayer, the non-taxpayer can kind of lend some of their tax-free allowance to the taxpayer.
And this is something that's not necessarily about COVID-19 or an emergency payout plan, but this is something that many people aren't claiming, and it could generate £1,000, £1,200 at a much needed time.
Yes. So although it's £250 per year, you can actually backdate it for 4 or 5 years, and that's where you'd get this figure of 1188. So that's another one to remember. I mean, again, I'm conscious that this morning or this afternoon you're getting a lot of information, but when you get the slides through, you can actually carefully go through them and think, okay, that applies to me, that applies to my sister, And, again, if you've got further questions, there is a route through to Simone and I. Okay, so there's some further links that will be of help to you. Simone, were you going to pick up these ones?
Yeah. So, and in fact, there was a question about mortgages.
Oh, okay.
Are you putting up the next?
Yep, sure, Simone. I was reading the chat box there.
Okay. So there is support around mortgages. So the government has encouraged all mortgage lenders, and most of it adhere to it, to allow a payment holiday, a 3-month payment holiday. And most mortgage lenders are adhering to that. So here, the important thing to know here is it will not affect your credit rating. So it won't affect your capacity to remortgage later down the line or borrow money for a loan or anything later down the line, provided it's arranged with the mortgage lender. So what we want to make sure you don't do is just simply cancel your direct debit and say, oh, I'm allowed to take a payment holiday. You have to negotiate it with your lender. So that's something that's worth doing if you're going through cash flow problems. The thing to bear in mind, though, is that if you had 15 years remaining on your mortgage, you will still have 3 months later 14 years and 9 months remaining on your mortgage. So your payments thereafter will go up a little bit to take account of the fact that you're paying it off over 14 years and 9 months rather than 15 years, if that makes sense.
Exactly, Simone. So people aren't really saving money as such, but if they're facing a crunch in the short term of having enough money, they can take a benefit of this mortgage holiday that they don't have to pay for 3 months.
And the additional cost, if it depends on the term that's remaining, but if it was like a 15-year term remaining, and a modest kind of mortgage, then it might only cost you £12 extra a month. So it helps you in the short term big time, because that's the biggest expense most of us have, and the repercussion later on may not be very significant. And the other thing is you could also talk to your mortgage lender and potentially extend the mortgage term by that 3 months.
Yes. So Bradley's asked an interesting question in the chat box. Is there any precedent for mortgage lenders to adjust rates? So Bradley, in terms of adjusting the actual rate, I'm not so confident they would do that, because usually that is someone is signed up to, say, a fixed rate for 5 years. But all of the advice that the government are giving the industry is to be as sensitive as they possibly can to the needs of individual borrowers. And what Simone and I are going to return to again and again is that this is the time to pick up the phone or email and engage with these people. So I can't imagine they would adjust the actual rate at which they've lended the money, but they may be prepared to adjust all sorts of other things. Okay, Simone, back to you.
Great. I think we're covered on the mortgages here.
Okay, credit rating you mentioned.
Yeah. Yeah, and the same applies to any other form of consumer debt, or so personal loans and credit cards would apply too. So again, there's been encouragement from the government to get banks to agree to allow payment holidays for these things too. So again, the big message here is don't try to avoid missing payments without negotiating. The minute you miss a payment, that goes on your credit rating, and it will affect your future credit for up to 6 years. If you negotiate with them, always pick up the phone, negotiate with them, and in circumstances like this, they will certainly, they're more likely to allow it.
Yeah. And I think it's fair to say, Simone, that the financial services industry, it's not always covered itself in glory in terms of kind of PPI and various mis-selling scandals, but in this particular crisis, they are actually doing the right thing, nudged by the government, but they seem to be trying tremendously hard to help people out, which is much to their credit. Okay, I'll move on to the next slide. Sorry.
With overdrafts, there's again an encouragement to allow a £500 interest-free overdraft to help with short-term cash flows. But again, you might need to talk to your bank and check what they're offering you. The other thing is there was the overdraft interest rates were going to increase from April quite significantly, massively actually, up to kind of 40% interest rates, making it one of the highest, one of the most expensive ways to borrow money. But all banks are not, they're putting off the timing of that. So they're not going to charge you those horrendous rates at this current moment. And yeah, you might want to kind of talk to the bank about negotiating another alternative around the overdraft, particularly if it is going to be high interest rates. Now, with renters, so people that are renting, bear in mind that we've looked at the rules around if you own a property, you quite probably can take a 3-month holiday and negotiate that with the bank. So as somebody renting, know that your landlord may be in that position. And if they're able to take a 3-month holiday, then it's quite within your rights to ask for, request a 3-month holiday on your rent as well. So that's worth checking with them. There is a rule that right now, with what's going on, that they cannot, what's the language I'm trying to, they're not allowed to take you to court for missing payments. Is that right? Have I read like affordable repayment plan? Blah, blah, blah.
Yeah.
They're not allowed to take you to court. So it is, oh, sorry, it's the first point. So they can't evict you for the first 3 months. So this, remembering that they can take a payment holiday on their mortgage, probably, then that's definitely worth negotiating with them. If you're struggling to pay rent, this is where potentially the other universal credit, the financial difficulties, that alternative payment arrangement, there are other options that you may be able to claim on. But the other thing is your local council may be able to award you a discretionary housing payment. So contact your local, we can't give you lists of this because it depends on which local council you're with. But if you kind of Google discretionary housing payment council, see what comes up in your area, you'll be able to find a kind of helpline or an email address or somebody to contact. And then utility providers are also being urged to support you through this. So if you're struggling to meet any of the payments through any of your utility providers, again, pick up the phone, send an email, negotiate with them about allowing you some time to delay payment for a few months.
Yeah. Okay, Simone, move on to the next one.
Council tax too, there's a potential to have a payment. So the main theme of all this is, over the period of this time, let's try as much as possible to kind of freeze payments wherever you can, particularly when it's allowed, when it won't affect your credit rating, and it won't jeopardize any of your financial arrangements going forward, apart from the fact that, yes, it will add you'll have to pay the cost eventually, but you might have a longer period to pay that. With a mortgage, like 15, 20 years, or with council tax, I think they're allowing up to 2 years to pay back the overpayment, the underpayment. Shall I cover this one, George?
I don't mind taking over. Just a couple of questions coming through in the chat box. Someone said the fixed rate mortgage ended in September. Do you envisage the rate skyrocketing? A tough question to ask an economist to forecast the future. At the moment, the Bank of England base rate is very, very low, but as far as I understand it, that's not been reflected in mortgage rates. So I think it's a matter of keeping a close eye on what happens. I mean, the macro economy, that's the kind of the big picture economy. The policymakers they're trying to work out what to do, and I don't think they really know. I've read in some of the personal finance journals that they're expecting mortgage rates to actually go up a little bit, reflecting risk and uncertainty in the future. So that's one we can't answer just now, but it's a matter of keeping a close eye on mortgage rates. And
although the interesting thing is that the interest rates now are at the lowest level they've ever been, right? 0.1%.
That's the Bank of England base rate, yeah. But mortgage lenders don't necessarily,
No.
depending on the mortgage product one is on. And a couple of contributors have said that they've had an email from the bank saying, yes, the overdraft has been extended to £500. Okay, so I'll run
so
through.
That's good to see.
This is just a quick little slide. Actually, there's a money-saving expert, Martin Lewis, who's done tremendous amounts for consumer rights, is encouraging people to remember that there is actually a tiny little tax break for people who are working at home, and the link is there. It's absolutely legitimate and is encouraged. So if you are working at home, if you're furloughed and working at home, follow that link and you will save a little bit of money on your tax. Okay, so this is insurance. So if you've got life insurance and income protection insurance, that will come into play during the coronavirus crisis. Critical illness will not, because thus far it's not classified as a critical illness. And it looks as if you do not have to adjust your home insurance policy if you're working at home. So those are all important points to bear in mind. And I think, if I can just kind of summarize where we've got to, we know we're in a tough time, but the government and commercial companies are doing as much as they can. However, and I think this is where Simone and I have put on our coaching hats, the most important person who can help is actually you. So there's a lot of action. You've got tremendous agency and power to influence your own circumstances. Okay, so maybe this is a time, if you have built up a contingency saving fund, maybe this is the time to draw down those funds. The one caveat is that it's likely that savings rate might decrease, and therefore you might not get back in at the same rate you're receiving now. But if you do have an emergency savings pot, now's the time to raid it, should you need the money. Okay, and this is the one that we did actually receive an early question on, which is what happens to stock market investments. And I mean, I don't know how closely you follow the FTSE and the S&P 500 in the States. I happen to follow it pretty closely, and it's been an absolute, well, I was going to say roller coaster. It's been mainly on a downward trajectory. And I think a lot of our mainstream media can focus on the drama, and by focusing on the drama, they miss the big picture, and it can help fuel fear and panic, especially in this present moment. So what Simone and I would say, and I think if you know anyone else who's a financial services professional, the advice they would give their clients, not always the advice they follow themselves, is don't give in to your emotions and panic sell, because what you're doing is selling your investment, what might be the bottom of the market. And I'll move on to this next slide that Simone had identified. It is a little bit difficult to read, but in summary, the top bit is the bull years. That's when the stock market is booming. And the bottom is the bear years when it's declining. And some of those declines represent really huge global events. The 1929 stock market crash, the Second World War, the dot-bomb crash in 2000, and the financial crash in 2008 and 2009. And what do we see from that? We see that, okay, the stock market does suffer from short-term volatility, and that can involve substantial declines, but the increases hugely outweigh them. And if we reflect for a moment on why might that be, because when one invests in the stock market, you're actually investing in individual businesses, and at the moment, many of these individual businesses, pharma companies, delivery companies, they're continually innovating to try and kind of provide a service to people. So human ingenuity should and always has provided stock market growth, and there is no reason to expect this present crisis, without underplaying it, should be any different over time. Simone, have you got anything to add just to that little bit?
No, I think that's the main point, is that it feels horrific and scary particularly if you have a pension fund and you're close to retirement age. This is going to be hugely alarming, or feel hugely alarming, but we have to just sit tight on the fact that historically the market has recovered, and it has to, because we have to, just like personally we have our own strength and resilience, the market, businesses have their own strength and resilience, and will come through. And we just have to sit tight and wait. Now, that might have a big impact on you if you're just at a point where you're out of the accumulation stage. So, you know, most of us may be in the stage where we're accumulating assets for the future. If you're needing to draw on it, like you've just retired, then that's going to hit you the hardest. But you only need to draw on what you need to draw on now, not all of it all in one go. So it's still the vast majority, hopefully, is money that you can leave and wait until the market has gone up again.
Yeah, a couple of questions in the chat box, Simone. One about whether you can do paid work with another employer whilst on furlough. The guidance is that mostly one cannot, but it depends on the specific contract one has. So often one's employment contract might say, you know, you're working with us, you can't work with someone else. Some might say you're free to work with someone else, and in that case, it's possible to look to work with someone else while you're on furlough. But by and large, if you are on PAYE with an employer, you certainly cannot do any work for that employer. Your specific employment contract might say you could work with someone else, so it's worth looking at the specifics. And another question as to whether it's a good time to buy into the stock market. You know, again, a lot of this is regulated financial advice, but in terms of general advice, you know, what one might say is there's never a bad time to buy into the stock market, and one can diversify risk by putting into an index fund that covers global equities. Okay, Simone, I'm going to bump on to the next slide. Yep, okay. So this was what one can do with spending. Simone, were you going to talk through this one?
Yeah, so the aspects of this that that I'm very close to is I help clients manage money more effectively, and often I'm working with people that are mismanaging money and have habits and behaviors that they need help getting out of. And what's been fascinating in this current climate is that we may have looked at spending plans back in December, and what was essential spending back in December now over this period of time is so much has changed. So it's really kind of helping people question what was essential spending in the past. They may not see that in the same way going forward. So right here, right now, we can't pay for cleaners, we can't pay for haircuts, we can't pay for going out because we can't use those kind of resources right now. We've got gym memberships that most gyms will allow you to freeze now. They're anything that you're kind of paying for that you no longer have club membership or something that you have no longer have access to, you can usually kind of freeze those kind of payments. So many of your payments may come down. So discretionary spending may have been £1,500 a month, and now it might only be £300 a month, and really that's food, and there's not a lot else. So here we can make significant cutbacks, and if you haven't already done this, I would urge you to do that exercise of working out what are your fixed costs, and some of those are going to change right now. If you were paying for gym membership and things on a direct debit, maybe some of those have changed. So what are your fixed costs right now? What are your discretionary costs, the ones that vary in amount month by month? Right now, it might just be food, it might be nothing else but that. And occasional costs are usually an area that gets people into trouble. But again, right now, holidays, all that gift giving maybe even might be a little bit different. Maybe, so what maybe payments towards car repairs and things like that. But what are the costs that you have to live with for the next 3 months? So work out a kind of 3-month budget to show you that you can get through this period without getting into too much trouble. So what I'm finding is that people that are earning, even clients that are not able to benefit from any of the government incentive or government payouts, are able to manage because their payments are so much less than they were used to. So cutting out the non-essential spends, this is a perfect opportunity to go through your direct debits and look at Do you use that Audible membership? Do you use etc., etc.? You know, do you use all the things that you're paying for? What could you cut back on? And if you do that exercise and you've never done it before, you'll often find insurances that you're paying for that you, from an old mobile phone that you cancelled years ago, that you'll find things, no doubt, that you didn't necessarily even know were there that you were paying for. So I can't urge enough that bit, that this is George's point of, you know, where the coaching comes in, that where you can take control, and where so much is outside of our control right now, but this is something you can take control of.
100%, Simone. So this is a real opportunity to reset your financial habits. Huge. Okay. Yeah, this was just a quick slide. I mean, I wouldn't want to panic people, but you know, while everyone in this call, I'm sure, is absolutely ethical and sound, there are people out there who are trying to take advantage of their fellow citizens, and in a time of crisis, they might think people are more vulnerable, and therefore they're kind of doubling down on scams. So this is just, you know, it's a wee reminder to just be especially mindful of emails that you're not sure of the source. Watch if you're going through online purchases, you're following the due diligence procedure, you know, using strong stuff that one should be doing all the time. But, you know, in this time of crisis, maybe if people are feeling emotional, they're not paying as much attention. It's also possible if one has got elderly relatives who are using, you know, Zoom and online stuff for the first time, they could be especially vulnerable for scammers and crooks, basically. So, you know, that's just one to watch out for yourself. And also, if you're quite savvy online, think about helping those around you. Yeah, and this is another one that, you know, people are furloughed at home. Clearly, people have got all this creative energy. What are you going to do with it? So maybe it's an ideal time to do a little bit of online learning. There's a couple of links there. You know, so, you know, improve your skills when you're off. And I've put the human resource department. I gather in your employer, the health and safety officer is particularly helpful. That's Andrew Brown. If, you know, hopefully you will know who that person is. If you don't know, ask one of your work colleagues or pals and they'll point you to him. There's government support, there's debt advice, and then, you know, you may have your own financial advisor. There's also financial coaches such as Simone and I. And, you know, just before we say kind of goodbye for just now, what I would say is that you might have a friend or pal at work who you think are in financial difficulties, and, you know, maybe because they're a bit embarrassed they haven't come along today. Please say to them, look, you know, you'd participated in this, hopefully you got some value out of it. You know, make sure that they look out for the slides, or even send in the slides when you get them. Simone, do you want to put just the sort of final comments?
There was one other question which we haven't addressed, but I think we're kind of running out of time. But financial consent order, so just in terms of stop paying whatever you can get around to stop paying right now. I think that's, if it's a payment to your ex-partner, you're going to get them into financial difficulties by not paying those things. But anyhow, do you still do financial advice coaching for products? Are you? So somebody asked right at the outset actually about, I've never heard of financial coaching, how do we get in touch with financial coaches? So the website for my domain name, financial-coaching.co.uk, I don't know if it's on here, but if you Google Wise Monkey Financial Coaching, then I am building a directory for financial coaches around the UK. So it's not up ready yet, but it will be in the next few weeks if you're interested in kind of finding out more, or just Google financial coaching, you'll find kind of whoever is out there. But yeah, I appreciate that we're going through, we've gone through rapid fire, a whole load of benefits that are available, and it's huge amounts of kind of content to absorb, and at a difficult time emotionally. But hopefully that we've kind of given you some signposting anyway to gather more information, and maybe hopefully some ideas that you hadn't thought about before.
Yeah. Okay, team. We'll sign off just now, and I can just say thanks for your attention and focus. As Simone said, it's quite detailed, but money is important, and there's lots of help out there. So I wish you the best, and maybe see you again in the future. Cheers.
Thank you very much.
Okay, Andrew. Cheers. Bye.
Cheers. Take care.
Thank you. Thank you.
Bye-bye.
Bye-bye.